Hi, I'm Max Kaiser. This is the Kaiser Report. Stacey Herbert?
Max, what happens when peak debt makes peak resources?
Tell me.
It's called the white man's debt burden.
Oh, the white man's debt burden.
The burden, of course, being all those people around the world outside of the empire whose resources must be taken. Well, first we have the situation of gold reserves. We see Germany and Switzerland asking about their gold reserves that are held in New York. But it all started August of 2009. Germany's gold is in U.S. custody, Bundesbank confirms. This was based on a documentary made by Max Kaiser called Brown's Bottom. And you were investigating why Gordon Brown sold off the UK's gold supplies. And as part of the documentary, you traveled to the Bundesbank to find out why it is that they held theirs and they refused to sell theirs. Little did you know that on March 17th, 2008, that weekend, Bear Stearns would have been collapsed, gifted to JP Morgan, and Ben Bernanke on that Sunday night would have slashed interest rates on a Sunday by 75 basis points. You showed up at the Bundesbank, and let's turn to this little clip here where undercover you're talking to a Bundesbank executive.
Little did I know that on that very day, Bear Stearns had collapsed, interest rates had been slashed, and gold was skyrocketing.
You know, we're waiting to see somebody at the Bundesbank, and we've been told that they're now in lockdown mode. There's a crisis. They're on effectively red alert. They're afraid of talking to anybody because of sensitivities in this global market meltdown. It's quite remarkable, really. You know, we made the case that maybe they should be talking to the press. We were told that the situation is much too sensitive.
No, we didn't stop talking to the press, but only in situations like today. You know?
The fear is that the banking system itself is in peril.
That is the question, yeah. That's the question. That's in America, that's in Germany, you know.
Right. But you don't know.
Actually, now you don't know what's going on. No? Up to now, I mean, you don't really know what's coming, no? What's coming next.
Yeah, that was a shocker. And then they revealed that most of their gold, 60% of the gold of Germany, is held in New York. And this then subsequently became a big story, went around the world.
Well, of course, in GATA, the Gold Antitrust Action Committee pursued this story, as did Rob Kirby in Canada, and they got a statement from the Bundesbank, which they report Kaiser's documentary may be sensational for getting an acknowledgement from the German central bank, the Bundesbank, that Germany's gold reserves are actually in the custody of the United States. This is a detail the Bundesbank long has denied to others who have inquired, and is potentially a matter of great controversy in Germany. It raises the question of whether the German gold reserves are actually intact at all, or whether they've been used by the U.S. government as part of its long-time gold price suppression scheme, or have been commingled and diminished with gold reserves of other countries held in the United States. So this was written in 2009, Max. The term commingling?
Yes, it could very well be. Ever since the MF Global scandal, Germany and other banks and central banks are very concerned that their gold reserves that are held in New York and in other locations could, quote-unquote, vaporize. And as these various countries pump up their money supplies and debase the value of their currencies, now with Brazil saying it's going to debase again aggressively, and with Japan looking to debase again aggressively, America's trying to debase, the euro needs to debase. These countries are very concerned because they realize that eventually it will go toward a global gold standard. But has been pointed out by the likes of Jim Rickards, under that scenario, the U.S. could declare a martial law over the global gold supply that they hold in Fort Knox and in the New York Fed and in other locations, and become the biggest gold purveyor in the world through a new kind of global fiat. And certainly the MF Global scandal sets that up. When you have a banker that can just steal $1 billion without any accountability whatsoever, then why not take a few billion or 100 billion in gold?
Right, and again, and now they're starting to question, are we ever going to get our gold back? The gold treasure of the Germans in New York. This is from Bild, the largest circulation newspaper in Germany. So they're calling it the incredible gold scandal. They found out that the Bundesbank has not actually audited their alleged gold reserves in the New York Fed for over 3 years, and they're supposed to audit it every 3 years. They were supposed to audit it in 2010. Apparently, they have not done that.
Well, also, Germany is looking at what happened to Greece as part of the Troika, the IMF, the World Bank, the ECB, trolling for assets in Greece. They've already seized 111 tons of gold that was held in the Greek gold reserve, the central bank. That's now gone. It's now the property of the Troika. So they know that people are looking for gold around the world. And so they're very, very nervous, as they rightly should be, as we reported on at the time. And we got confirmation within the Bundesbank itself, confirmed face-to-face, that in fact the gold was not there.
Also, you're seeing an awareness of the citizens in this post-World War II era where we've had this explosion of debt. They're wondering, what's backing it all now that it's all falling apart? So, alarmed by the Bild report, the Christian Democratic Union Member of Parliament, Philip Misfelder, is demanding the list of gold ingots from the president of the German Federal Bank, Jens Weidmann. He told Bild, quote, "I was shocked. First they said there is no list. Then there were lists, but they were secret. Then they told me that inquiries endanger the trust between the German Federal Bank and the U.S. Federal Reserve. What does the Federal Bank want to hide?" And, you know, as we've been talking about, we've hit peak debt. This 3,400 tons of gold, of which about 2,000 is in New York, they say. So if this has been rehypothecated, lent out magically to create 200,000 tons worth of gold that you could see as the knock-on effect. And we could see a major turmoil and a major collapse of this empire of debt.
Well, one of the most grossest misconceptions in the globe today is that the world is not on a gold standard. The world has been and will always be on a gold standard. The fact that right now you've got $600 or $700 trillion of derivatives just means that the amount of paper backing the gold has never been in greater volume. You have to look at it in terms of an inverted pyramid. Throughout history, sometimes there's a 1-to-1 ratio between gold to paper money. Sometimes, like we have now, there's a 1 to 700 trillion relationship between gold and paper money. It always reverts back to the mean. It always corrects back to gold. It's something that Warren Buffett knows in his heart, that his dad, Howard Buffett, tried to instill upon him the truth about gold, but being a rebel that he is, he's going to go down in flames with his paper mountain.
So Max, the locals, the natives of Germany and Switzerland are uppity. They want to know where their gold reserves are. They think they have a certain amount of independence from the empire. They don't. Apparently, their gold is in New York. Now, the most important thing, though, backing the U.S. dollar is not necessarily those gold reserves. It's the oil reserves of all the other countries around the world which the American military and the American government are burdened by. Whether it's Libya, whether it's Iraq, whether it's Yemen, Somalia, we are burdened by taking care of these people and their oil reserves.
Like PIMCO over there, Bill Gross says the price of oil is the new discount rate. He's referring to the oil as the de facto currency of the globe, the petrodollar that took over in the 70s.
So, lo and behold, here comes the white man's burden.
The white man's burden. That's a Rudyard Kipling reference, I believe.
I think you're right. It was a kind of a poem he wrote for a magazine, and it was in order to encourage the U.S., Teddy Roosevelt, to go save the Philippines by taking them. So, on Invisible Children's Kony 2012 campaign, unless you're asleep under a rock somewhere, you will not have been able to miss Kony 2012. It's this video by these 3 white evangelicals and their little blonde child who were saying that we need to send troops to Uganda. We need to assassinate this guy, Joseph Kony, from the Lord's Resistance Army. So the quote here is, if there was a prize for the NGO who best commodifies white man's burden on the African continent, and more specifically in Uganda, Invisible Children would win. They recently struck again with a new video and campaign titled Kony 2012.
Well, I understand that this video has gotten something like 50 million views.
Yeah, well over that, yeah.
In 5 days.
In 5 days.
And the kid in it is not Justin Bieber.
The child in it is not Justin Bieber.
It's some mop top with his white parents.
Exactly. And now the point is they're asking for the population of America to force Obama to send more troops, to send troops to Uganda. Time magazine makes this inconvenient point. They say the U.S. military's African Command, AFRICOM, has deployed its assets against Kony since at least 2008, a fact that goes conveniently unmentioned in Invisible Children's video. Now, Max.
Yes.
Why is Africa always such a burden to us white people?
Because they got resources that us white people want.
It backs our debt. Uganda's oil could be a gift that becomes a curse. That was only 4 or 5 months ago in the New York Times. Lo and behold, Uganda's oil is now a big curse. It sees the U.S. combat troops there because in 2006, over 2.5 billion barrels of oil were discovered in Uganda along the border with the Congo, which is where conveniently Kony is.
Yes, well, this is the white man's burden for sure. Whenever there's oil in the air, the white man is there. That's a poem Rudyard Kipling not well publicized.
Well, we're of course also burdened by the resources and people of Afghanistan. Unintended irony from the New York Times. The New York Times today has an article lamenting the extreme levels of corruption in Afghanistan's ruling class. A narrow business and political elite defined by its corruption, they say, and explains how these unchecked improprieties are impeding U.S. goals for post-withdrawal stability. Yes, apparently, the American taxpayer and our army are burdened by these corrupt Afghanis. According to the New York Times, the players include people tied to President Hamid Karzai's inner circle, many of whom have profited from the crony capitalism that has come to define Afghanistan's economic order and nearly brought down Kabul Bank. Despite years of urging and oversight by American advisors, Mr. Karzai's government has yet to prosecute a high-level corruption case. So here's the New York Times, the paper of choice for Empire, not making any connection. They didn't once in the article point out that the U.S. also fails to prosecute their bankers. And yet they're talking about the burden of having to stay there and take care of these Afghanis because they can't figure out how to get rid of crony capitalism.
No, it's the white man's debt burden. The white man puts the debt into these countries, and then they've got the burden. That's the white man's debt burden. It's like, hi, I'm a white man. Here's some debt. Oh, Iraq, here's some debt. Libya, here's some debt. Oh, Africa, have some more debt. Middle America, have a few $1 trillion in debt. Greece, have some $3 trillion in debt because I'm a white man. Here's my debt burden. All right, Stacey Herbert. Well, we'll have to say goodbye for now, but thanks for being on the Kaiser Report.
Thank you, Max.
Don't go away. Much more coming your way, so stay right there. Welcome back to the Kaiser Report. I'm Max Kaiser. Time now to go to the state of Washington to talk with David Morgan of silver-investor.com. David Morgan, and welcome back to the Kaiser Report.
Max, great to be back with you.
All right, David Morgan, the silver investor. First, you have the exact silver coin that Ron Paul recently held up to Ben Bernanke during congressional testimony. Tell us about their confrontation and how you came in possession of this coin.
Well, thank you, Max. This is the coin right here. Hopefully I got it in a good camera angle. It's called Silver Circle. It's some friends of mine that have a movie talking about the collapse of the economy and silver's role post-collapse. It's called silvercirclemovie.com. You can go to that website and check out the trailer. They gave one of these to Dr. Paul, and of course he held it up during that testimony. And there's quite a bit of news around that. On the internet, especially those that are, awake and aware from people like yourself, Max, that are telling the truth about the financial situation.
Right. Now, talking about silver and the Silver Liberation Army and Silver Circle and all these grassroots campaigns. Last year, of course, we had Crash JP Morgan buy silver. Now, I see that some bloggers have taken up the cause. Tell us about buy an ounce, give an ounce.
Well, this is a lady that I know that does a very interesting blog, sherryquestioningall.com. She blogs on all kinds of things. In fact, she called me this morning with some updates that people might want to check out regarding Goldman Sachs and their position if the economy collapses. I guess the bankers get paid first. That's based on hearsay. I haven't read the article yet. But going back to what we want to talk about, buy an ounce, give an ounce. It's piggybacking on your, buy an ounce and take JP Morgan down. And she's basically saying, you've got to understand that the physical realm doesn't equal the paper realm. Anyone that buys an ounce, you're deleveraging those bankers roughly 100 to 1. And that this is something you should own, and it's something you can give away as a gift. And also think of it as some kind of a situation to give something of value to somebody else, not only in maybe a barter transaction, but as a gift. So I like it. It's piggybacked again on what you started, and she has your video up there again. So maybe you'll start getting a lot of new people that wake up to Max Kaiser. I can't imagine there aren't too many people that haven't heard of you, but you never know.
All right, now, David Morgan, you mentioned that the ratio of physical silver to paper silver is about 100 to 1, 100 times more paper at least. I mean, if you look at the derivatives markets out there, and then you look at the balance sheets of these banks that are not even counted in the overall look at what they're holding, the ratio is even more astronomical, paper to physical. Now, recently there was a smash of the silver price where 110,000 paper contracts of silver were sold in less than an hour. So how many ounces of this is there in 110,000 contracts? And is this unusual, David Morgan?
Very unusual. And Max, I'm just going to back up if you allow me, but Jeff Christian is the one that during the testimony about manipulation of the silver market testified before the CFTC that the paper to physical ratio is roughly 100 to 1. And we usually have Jeff out to the Silver Summit here in Spokane every year. And he had an interesting presentation last October, and he said, really it's not 100 to 1, it's 400 to 1. And he put up that chart. I actually have that for our members on the members part of the Morgan Report. But anyway, going forward, yes, the smash down, it was roughly 110,000 contracts, 5,000 ounces per contract. So you're looking at about 550 million ounces of fine silver, which is roughly 3/4 of the amount of silver mined in a year. And all that took place during one trading session on the CME. And yet the authorities just look the other way. What's so striking to me is the amount of people that get so upset by this, me being one of them, but yet they feel that they want to give up, that they have no recourse. And you can't control that, of course, because the CFTC won't control what their mandate says they should. But to me, I want to make the point that Eric Sprott, who started the PSLV, the Physical Silver Trust, recently did a shelf filing for 1.5 billion ounces. Not that long ago, they took that shelf filing down and they issued about $300 million to buy roughly 10 million ounces of silver. When that physical 10 million ounces of silver was bought, the price shot up from the point it was announced till it was collected, roughly $2.50. Yet it took 55 times that amount on paper to take it down the same amount in price. So I really feel that we're winning, Max. I mean, that again shows the point of what you started with, the buy an ounce, take down JP Morgan, this buy an ounce, give an ounce. It's all about taking a physical and holding on to it, because that is what deleverages the system. If it takes 55 to 1 to get the system down the same amount of price, it shows you that buying something physical really has meaning.
Well, as far as these grassroots campaigns like Crash JP Morgan, Buy Silver, or Buy an Ounce, Give an Ounce, that I've been involved with, I've really gone to school on Eric Sprott. Eric Sprott's the guy who has come to the market and said, look, here's what the annual production is, here's what the annual above ground supply is, here's what the demand is, and this thing is going to go higher. And of course, with Eric Sprott, we're not talking about buy an ounce, give an ounce. We're talking about a billionaire, one of Canada's leading billionaires, who's talking about buying $1 billion worth of silver at a time. Now, you probably have more, well, I know you must have more contact with Eric Sprott than I do personally, but is he, I think of him as a silver vigilante, like a Clint Eastwood character going down to the silver pit, and then just firing away at these paper of silver bugs. But do you get the sense that he's genuinely has kind of a burning in his belly to go after these paper bugs?
Well, he's never told me that, but he really talks about the banking system initially and how unsafe it is and how safe it is to own the metals. And that's really your only asset class that you can hold outside the banking system where you're not exposed to these banking problems that exist. So that's number one. Number two, yes, he sees the silver, similar to I see it, as probably the best investment over the next 10 years. And then he goes through his numbers, which are very similar to mine, and his reasons why, which again are similar. And I really do believe that he put out this shelf filing just to have the ammunition ready to fire away. There's $1.2 billion left on that shelf filing. So, you know, at the time, I forget the price, but he could have bought roughly 50 million ounces of silver. He's only bought 10 million so far. So I believe that anytime silver gets in the under 30 range, he's probably going to take a shot at it, meaning he's going to buy more physical. So I see it as very bullish, as I said, and I think that we are going to win.
All right, let's talk about that other precious metal, gold, for a second, because there's some very interesting cross currents going on and some international dialogue happening based on what we've been saying on this show for quite some time. That is to say that a lot of the European central bank gold is not held in these European central banks. It's held in U.S. Federal Reserve Bank in New York as one of the main repositories for German gold, for example. So now they're starting to freak out in Germany that, wait, we want our gold back. And we see this all over the world. Venezuela repatriating gold. We see repatriation of gold now being talked about in Switzerland. What's this trend all about, David Morgan? Are these countries finally waking up to the fact that if they don't have the physical in their vaults, then they don't have it?
Well, exactly, and I think you were instrumental in getting people aware of that, and now they're following through with action. You know, it's all this gold's not money. I mean, Bernanke testified. I think Ron Paul asked him about gold, and he said, well, it's a tradition. It's not money. Regardless, banks know what it is. In fact, if you go back in history not that long ago, I'm going back roughly 10, 12 years, the Bank of International Settlements, the Bankers Bank, you actually used to be able to be a stockholder in that. Now that's totally private again. They used to account for every asset in gold only. In other words, they didn't care what member bank. Again, this is the highest bank that exists, at least to my knowledge, unless there's some black bank somewhere that no one knows about. Bank of International Settlements accounted for everyone in gold only. So they know what it is, and they know how to account for it, and they know what it means. And these countries do as well, and they're scared. And again, I think you were instrumental in getting that started. And now these banks are getting worried, and they say, you know, if something really takes place, we don't want our gold sitting in the New York Fed. I was in New York, a couple of years ago, had toured the Fed, took some photographs, did a little video for my members, but I'm on the street walking on the sidewalk. And as I'm walking right past the Fed there, I'm thinking to myself, you know, I'm walking over who knows how much percentage of the world's gold right now, and how many people are even aware of it, and how many people realize what a small, you know, surface area this is relative to the whole planet. Gold is rare. Gold is scarce. Gold is valuable.
Right. Now, you mentioned the BIS, the Bank of International Settlements. They also came out with a report last year as a recurring, ongoing look at the positions in the derivatives markets, because they try to keep track of these markets. And that's where the data came out originally about JP Morgan's 3 billion ounce of short silver. They've got a balance sheet that looks like Mount Vesuvius the day before it blows up. If silver gets over 50, JP Morgan stock is worth zero. That's what my work tells me. What do you see on that front, David Morgan?
Okay, well, not to pick an argument, Max. First of all, everything you said I agree with. Secondly, I mean, they're totally insolvent. They're totally broke right now. I mean, they are absolutely insolvent. So how do you blow up a bank that's totally blowing itself up already? It's just no one seems to realize it other than those that follow work like yours. But what will happen if it goes above 50 or 100 or whatever? In my thinking, it'll just be another too big to fail. They'll print up more funny money and try to cover it over. But I think that's very relevant of what eventually will happen. I think more importantly is it doesn't have to get to that price, I think, for enough people to wake up and the whole financial system to crumble in other areas. I mean, this whole idea that you can have that much of a short position is ludicrous. I'm actually okay with hedging. I mean, all of my coin dealer, bullion dealer friends need to hedge in the market because it's a margin business. So they've got to hedge off their daily activity, and a mine might hedge off a year or so, but to hedge off like 5 or 6 years of total global supply, and when you see what they have in the public domain as far as how much silver they have, it's pathetically small. I mean, this is just ridiculous. And again, I go back to the authorities. I mean, where are these people? You know, it's obvious what's going on, and yet they've been looking at this thing for years now and have yet to make a statement. And then this happens just recently on the last Smashdown. Again, no comment. I mean, I think the people have had it. The people that are awake and aware have certainly had it, and it just frustrates me.
David Morgan, we're out of time, but we'll speak to you again soon. Thanks so much for being on the Kaiser Report.
Thank you, Max. It was a pleasure to be with you.
All right, and that's going to do it for this edition of the Kaiser Report with me, Max Kaiser, and Stacey Herbert. I want to thank my guest, David Morgan from silver-investor.com. He is the silver guru. Make no mistake about that. If you want to send me an email, please do so at kaiserreport@rttv.ru. Until next time, this is Max Kaiser saying bye, y'all.